What's up, traders? It's Chosen Trades here, back with another video. Today I'll be doing a post-trade breakdown on an EU short I took during the New York session on Monday, November 6, 2023. I'll also be discussing my thought process on why I took the trade, how I felt during the trade, and some observations made at hindsight. I was bearish for the day and potentially even for the week, as last week price needed to trade back into a monthly fair value gap. So as we can see here on the chart, we're on the monthly time frame. Price created a structure shift, so it broke below this short-term high, broke below, and even broke below this as well, so it made even a stronger confluence. Broke below, and then we can see here this is the monthly fair value gap. So price broke down, and then this week we're able to see price was able to trade back into the monthly fair value gap and even balance this imbalance. So we'll drop down to lower time frames for you to see the trade that I took, but just to focus more on higher time frame analysis, we can see here price filled that, making this a strong PD array, because this was the PD array that I was looking for price to tap into. Once it tapped into here, then we can kind of pick our spots in the market based on time of day and as well as how price moves during liquidity hours. So yeah, let's drop down to the 1 hour. Yeah, so this was the trade that I took. But let's drop down to the 5 minute, since that's what my entry was at. So yeah, as we can see here, price before the New York session was right here at 7 a.m. Ran all the way up into the highs of this PD array, consolidated for a bit, wasn't really going anywhere. Then within the first 30 minutes into New York, it created a strong market structure shift as I marked up here. You can see there was an imbalance that needed to be filled here. It's also the fair value gap. And my entry, decided this is where I wanted price to go into, was where I marked up this dealing range with the fib. So price from the high to low, you can see here it traded into a nice, traded above equilibrium. So we're in a premium right here. So anywhere in this zone, it's a nice area to enter. It didn't get into the OTE since there wasn't really an area of significance. So price ended up just going above, and this was good enough for me because this was a clean entry to take shorts, as well as there's displacement here. For those of you that are unsure of what a displacement is, I went over that in one of my earlier videos. I put a quick snapshot in the video for you guys to check out that video as I go more in depth with it. Price was consolidating for a little bit, wasn't really going anywhere. Price actually tapped into here. I ended up doing a market execution. Price dropped a little bit, then ran back up. Definitely could have took another entry here. So yeah, price was consolidating and had several manipulated movements. So yeah, once price traded back into this area, I knew we were good to go. And last week was actually also NFP week. And NFP stands for non-farm payroll. Non-farm payroll is a key economic indicator of the U.S. economy. NFP data is normally released on the first Friday of each month. It tracks employment changes in the U.S. as well as giving a solid idea on the conditions of the U.S. economy. It's an extremely volatile way for news, as news manipulates or even sometimes moves price action in its intended direction. Traders are highly advised to not trade on that day. So for that reason, NFP weeks are usually the slower weeks for me on the calendar as a trader. By Wednesday of NFP week all the way to Friday, I don't trade or look to take any setups. It also depends on if there are many major USD or Euro news earlier in the week. Ultimately, that determines if I trade on Monday or Tuesday of NFP week. You guys may be asking, how do I keep track of NFP week, or how do I keep track of any news that will affect my trading pair I use a platform called Forex Factory. And I'll put a link in the description for y'all to check out if you ever need a place to track currencies for your trading pair. It's very helpful. I've been using it ever since I've been trading. Let's go back to talking about EU and the analysis. So yeah, price finally traded back into that monthly fair value gap as I mentioned, which filled the CIBI. So this red zone is that CIBI. And as we're now in an important PD array, which is, now on a lower time frame, on the 5 minute time frame, I was anticipating a market structure shift and a displacement. So with the market structure shift, this is very key for me to see, because that lets me know that we're no longer bullish. In this case, if I'm looking for shorts, we're no longer bullish. I need to see that break of structure, usually at the short term high, because I usually need to see a break of structure at the short-term high because that lets you know that bears are in control, and I can start looking for shorts. And then displacement is also needed because that allows me to know that that sudden drop or that sudden energetic movement downwards, that allows me to know that price needs to eventually rebalance and continue going lower. So with having price have that energetic shift down, I know ultimately it has to trade back up to rebalance, and then we can continue heading lower. So those are very important, and I need that 1-2 punch, so to speak. And we can see here price did that market structure shift. So now that we see that energetic shift in movement, now I need to see price rebalance or trade back into that area of liquidity that price needs to re-engineer back into. It taps but doesn't really give a nice, fill in. So it drops, then goes right back in all the way up, and we can see price just melts heavily to the downside. Can even go to 15-minute. Yeah, beautiful. We see it just tap a little, run up, and then flush beautifully down. Now let's focus more on the entry here, because I know some people always want to know how do I know when to enter a trade. So for me, my entry model is really the fair value gap. It's a combination of either fair value gap or even order block, but I'm more prone to using fair value entry model in the ICT 2022 mentorship. So since we have our fib that we drew up here with our daily range of the swing high to swing low, and since we're looking for shorts, you want a premium level. So anything above the equilibrium is a premium, anything below the equilibrium is a discount. Now that we have that, 62 or even 79 are perfect areas of entry. OTE is a very precise sniper entry, but you can never go wrong with taking the 62 fib level down as a place to enter. So yeah, we ended up entering at the 62 fib level confidently. So we ended at the 62 fib level. You can see here that my stops were above this swing high or even the structural high. I didn't put it above here just because I knew if it was gonna tap here. Yeah, so I knew it was gonna eventually come up and take out these. So I think this is a valid enough area to put my stops at. And then my TP levels were at levels of liquidity. Yeah, my TP levels were placed at areas of liquidity. So at sell side liquidity and the drawn liquidity. So here's some of you who are new or are learning trading would be asking, what is liquidity? So liquidity is simply where price is most likely to tap into. This is where buy stops and sell stops are located, which are obvious highs and lows. So in this case, since we're going short, we're focusing on sell stops. Sell stops are where obvious lows are, and also areas of where liquidity are resting. That's where orders are usually placed at. Sell stops, buy stops. So in this case, since we're going short, there's orders placed below here. And then we have this drawn liquidity where price will tap into. To kind of explain it here, price tapped into here, orders were activated, and since I mentioned we didn't really get a nice rebalance here, price will usually drive up one more time just to swipe that liquidity up in here and then push it down to the next area of liquidity to activate those next levels of orders. My trading style being from ICT concepts, obvious highs and lows are considered relative equal highs or relative equal lows. So in this case, this would be relative equal lows, also known as sell side liquidity. Drawn liquidity right here where orders are resting below. You see price just went into those areas, drop out of the way nicely to those orders just to continue moving price in its intended direction. Overall good trade for me. This is an overall good trade. I ended up market executing. I didn't place an order limit just because for me, I like to see how price reacts to my entry zone before entering the trade. And then once I kind of see at the hard right edge of the market what it's doing, I usually my edge takes over and I know if the trade is good to go or not. So yeah, price moved nicely in my favor and I just kept a close eye on the trade, setting alerts where needed as to when to take partials. Then price ultimately hit my TP, my final TP. So yeah, I was up for the week. This was the only trade I took for the week. I just sat on my hands for the rest of the week, and I'm looking forward to what the next week brings for me in terms of setups. Now, with the benefit of hindsight, I think if I added an extra entry early in the trade, but with with lesser risk. That definitely would have been nice to see, since my checklists for entering the trade were all checked off, which gave me confidence that this was a trade that was going to hit. And as we can see, this was a 5-hour trade. And then one thing I do want to share with traders is that all traders should have this as part of the plan, as when adding another position to your trade and you're ultimately incurring additional risks, the next position you add on to your current position should be much lower, and this helps with mitigating risk and protecting your trading account. This ultimately will pay dividends in the long run. I also noticed I was patient with taking this trade, as you'll see later in the video from the pre-recorded trade. I was focused on my entry and ignored the consolidation that occurred prior to the move. I stuck to my plan and I reaped the reward. It takes practice and certainly patience to know where your entry is and not feel forced to enter a trade when you see price moving up or down in your favor. And this is known as FOMO, fear of missing out. So knowing that you see price moving in your direction, like for example, right here, let's say I didn't get in here and I see price moving, or have FOMO saying, oh my gosh, it's going to leave me. But, having patient understanding that I'm looking for a premium entry, level above equilibrium premium, that would be a better entry as opposed to here, and that allow me to have a tighter stop loss. So just understanding the nuances of and how price action moves, and you'll usually see how price moves, like with the certain patterns and the certain way it manipulates. And sometimes it purposely does this just to entice retail traders to rush into the trade. But if you're patient and that price action usually will come back and tap into this area, or even will usually come back in here, because now traders that entered here, the retail RICs of the world, they usually would rush to go break even. They rush to break even, they get stopped out, and then they miss out on all this movement down. So just being patient and knowing that he'll tap back into the entry, so that'll give you an opportunity to enter again, or even enter initially. And then once you see price moves a little bit further based on your trading plan, then you can go break even. But rushing to go break even usually is not a good idea. Let the price action breathe, let it do its thing let it do its thing, just let it be free flowing to just move, and just be patient and let price action do its thing, at least within 10-20 pips of movement, because that's usually when price action is getting warmed up to kind of either flush or take off if you're bullish. And then once that occurs, then you can break even after the first TP or even the second TP. All depends on how you see it. Thank you guys for watching this video. Questions, comments, concerns, drop them below in the comments section. If you haven't already, subscribe to the channel, as we are growing steadily. Every video drop is a way to provide value to traders on their journey. I hope you guys found this video insightful. Signing out, Chosen. And with that being said, enjoy the trade that was pre-recorded live.